everybody, it's RoyalBluFX. If you like this channel, go ahead and subscribe to this channel right now because we always give out free content, and throw likes to this video because we're about to leave you with a lot of value right now, so stay tuned. And right now we have a sale going on right now for our online academy, guys. It was $1,300 for our course, but right now it is $799. That is $600 away from $1,300, obviously. You guys can come in and join us right away if you'd like. We do have 5 free online sessions for 1 hour apart, right, to do these sessions with us, right? We also have a Discord that we're starting up right now, and we also will give you 15 free signals if you buy the course today at $799, because that's what we're doing. That's a special. Guys, go ahead and check us out right now. DM us on Instagram at RoyalBluFX, and then DM us for payment options, stuff like that, and we'll go ahead and send you the online academy, and then we can begin and start with you right away. So let's begin with this video. All right, so how do we think about outside the box? Okay, a lot of traders don't understand the essence of trading outside the box, because a lot of times we trade inside, or at least what we see in current price, right? The current price movement. That means when, let's say, you know, we're on the, this could be the daily, maybe moving like this, right? And then inside the 4 hour, and then inside the 4 hours, the 15-minute, but then we start seeing, you know, 1 minute movements like this, right? And all we're fixated on is essentially what's happening here, but we're not essentially paying attention to what's happening on the 15-minute, say, for example, the 4 hour as well, right? Or the daily time frame, right? So that means, let me specify this again. This is the daily time frame, right? Daily high and low. This would be the 4 hour high and low. This would be the 15-minute high and low, right? And then you got the 1 minute highs and lows like this, right? So a lot of times when we're focusing on this, we're just focusing mostly on where the current price is, and then we're trying to trade it based on what we see. And this is what I mean, looking outside the box, right? Trading what you see outside the box. So that means that the daily time frame here would be considered anything away from the current price is trading away from, anything that's inside the daily time frame and the 4 hour, 15-minute, you're trading current price. But when you're looking anything outside of the 15-minute or 1 minute, right, you're trading outside the box. Okay, so that means if the 1 minute is here, that means the 15-minute high and 15-minute low is here. You're going to be looking to see where the 15-minute high and low is compared to where the 1 minute is, right? Because we know that the 1 minute structure is creating the 15-minute. The 15 minutes creating the 4 hour. The 4 hours creating the daily time frame, right? So I hope you guys can understand that. And as we all understand, I'm pretty sure a lot of you understand that a lot of times all the time, price is fractal. That means that structure is creating within structure, right? From the daily, 4 hour, 15-minute to the 1 minute, it's all creating the same structural highs and lows that we all like to trade. So let's go here and I'll show you some examples, right? So I'm going to do some replay just to kind of give you guys an idea how this works. I'm going to click that. All right, let's just click there. All right, put me back up there and do this. All right, so first things first, what do I see? Normally when I'm on the daily time frame, I start on the daily because the daily is the only time frame that I see here that that best fits the scenario that I'm calling out, basically outside the box, right? If you zoom out, you can see in the weekly and the monthly, there's nothing to the far left. We can't depend. This impulse here that's happening on the monthly, daily, weekly right now, there's nothing on the far left that we can depend on structure, right? Because where there's sellers, there's also buyers, and where there's buyers, there's also sellers. So let's go back on the daily time frame, and we're gonna start on the daily. Sometimes I like to go on the weekly and the monthly, depending on, say, the pairs or like commodities, for example, like gold. It fluctuates a lot, right? And so you can go on the weekly and monthly to look on the far left. So what you're trying to do right now is just see everything, right, outside the box, and then we can work our way in. So when you start trading, you start outside the box, then going in, right? So let's continue. So right now we don't see anything here on the daily time frame. Let me just play this quick. Once I see a setup on the daily, I can then move in, right? So another thing is, another key component here with trading is that whenever you're doing your setups, if you can't see anything on the daily time frame, you can also visit the 4-hour, because the 4-hour does give a good balance between structure movement, price action movement, versus the daily. The daily can take a long time, right? But if you want to do what's called intraday trading, you can go on the 4-hour and anything lower, right? But the 4-hour would be a good start, I think, to see any highs and lows, structural movements, highs and lows, right? So let's go on the 4-hour, and you can already see off the bat that there is highs and lows, right? Now the key element here is to look at where liquidity is, right? This is how we always do it. Where liquidity is, where previous highs and lows are, where where inducements are, right? So essentially, if we were to look at this, maybe even if we were right here, let's go over here, right? We would look at this. We would see a sweep, right? You can also look at it up here, right over here. That's a bunch of liquidity. You can see high, another high, right? So that is your that's your trend line liquidity, right? So we mark that out, right? And then from here, now I already have the New York session activated. So we can go to the London session also to activate it. I don't normally trade the London session on the US 100, but you can do so. I primarily like to just trade the New York. So once we get the sweep, right, then we start to react from here, right? We want to start looking what's on the 15-minute time frame. So if we have the sweep of all liquidity, we anticipate the market should go bearish, okay? We go on the 15-minute time frame. Oh, I can't do that, it looks like. Maybe on a 30-minute. Nope, I can't. I guess I'm way too far. Let's do another. Let me just do another. Let's go to another day and time, market time, because I can't do that. Let's just cancel out of this. Let's do this again. And we'll go on the daily time frame. We won't go too far back now this time. And we'll just start here so we can have enough data to work with. Okay, here we go. So let's repaint the picture again. What do we see? Okay, we need to be looking outside the box, not inside the box. That means I can already see price coming from this high to this low, putting up the new high. It broke this high, this old high here, right? Just like that. All right, and now we know that we're looking for price to go bullish, right? But that doesn't mean that when price is down here on the daily time frame that we're starting to look to buy. No, we're essentially trying to match what is happening where the market is, okay, versus where it's going to go and sweep liquidity, for example, right? So whether that means a high or a low, whether that means a trend line liquidity, right? Just like this, whether that means, your relative highs, relative lows. So right now we can see that price is going bearish, and we don't see anything on the daily time frame so far. The only thing that I see right now is this. I'm seeing that this is a low right here, right? Which is the inducement, okay? And we're looking for price to come in here. So when price comes there, I'm already well aware that when price draws near here, I'm going to start looking for the markets to go up, right? So I would wait for price to get here to go up. But currently, I can also now go on the 4-hour, because there must be something in the 4-hour, as I explained. If the daily, since the daily doesn't have a lot of structure to play with, right, and it could take a while, we can go on the 4-hour and revisit the 4-hour to see if there's any liquidity being swept. So in this case, I can already clearly see that we had liquidity swept right there. You can see right there. Let me get this here to do this accurately right there. Let's zoom in here, okay? I want to show you this, okay, right there. So we're not going to act quickly to trade, right? What our intention is here is, before starting to trade, make sure that the market actually takes liquidity first before you start trading. Because a lot of my times when I used to trade, I used to just start acting as soon as the market opened. I started trying to figure out where the market's going to go, right? So in this case, we found out that there's liquidity swept, right? So in that case, if liquidity was swept, our intention is to be trading bearish, because we know that price came from a high right here, from this high, right over here, or it's actually this one too, right here. It's all this liquidity right here. You can see, if you put that across, you can see price swept, right? So now our intention is, we know that this high swept all this liquidity here and is generating this move. That means this is my trend, right? This is where I'm looking for price to go bearish. So I just analyzed, right, outside the box. I saw what was outside the box. The outside box means that liquidity has to be swept somewhere for prices to move. And in that case, it did, right? So the price is generating. So not only that, we have the external move that swept, right? We also have the internal move on the 4-hour, which means the 4-hour also swept, which means now we're in congruency between the daily and the 4-hour. Price is both of the highs have been swept, both of the liquidity has been swept, and we're all going bearish. That means I'm selling, right? Now let's go down on the 15-minute time frame right here and show you how this would have worked. Right here, you can see that when the price swept, you can see London opened down here, swept the liquidity, is helping the New York session to begin, right, to continue price bearish. So when New York opens, one of the main key factors is I'm also looking now for the 15-minute to also sweep. Notice how we went from the daily to the 4-hour to the 15-minute. Okay, every time frame has to sweep some form of liquidity before you take that move, initial move, because whenever you have price in congruency with all time frames, the market's gonna the market's intention is to continue in that direction. You have more of a more power, let's just say, for price to actually hold, right, and to go in your way, right? So price is not going to just do some weird funny thing just because it does whatever price does, right? We're looking for price. We're looking to match price based on what the daily, then the 4-hour did, and then the 15-minute. So, in this case, we do see that we had swept another high, right? More liquidity. So in that case, I would be looking to look to enter here on New York. This is when New York opened. In fact, when this candle created in the 15-minute, it went over up here and took out this high. This would have been your entry, risk right at that high, and then you could target your nearest demand zone. In this case, it would be this. So that would be your next demand zone right here, right? And that would be your whole entire trade for the day. Now, I specifically like to trade the 15-minute, or at least look at the 15-minute as the directional, almost the directional structural time frame. It's not the actual direction, but it's part of structure based on the daily and the 4 hours. So I'm playing structure as far as as far as direction goes, but then I actually do drop down to the 1 minute as well. So once the 15-minute sweeps, you don't have to enter here on the 15-minute, although you don't have to go down on the 1 minute if you don't want to. However, you can wait for prices to come back down, right? And in between this high now and this low, we're looking for market on the 1 minute for prices to sweep another high and then re-enter there. If this is too high and if this is too large of a risk area, right, risk zone, you can reduce your risk to something smaller in there if you can see it on the 1 minute time frame, right? So and that's how you do it, right? And you hold that, having the vision of where price should go based off of where you saw price last being swept. That means 15-minute right here swept. That means we're going to target the next demand zone on the 15-minute, not on the 1 minute, on the 15-minute, right? So let's continue here. So if we were going bearish still, right, we swept 4 hours to price taking price bearish. The next day, we would do the same thing. We would wait for price to sweep liquidity. That means right here, you can see right over here, you can see that the market has swept this, right? And unfortunately for this day, we would wait for prices to change right here. Once they sweep the liquidity, we wait for price to change in here for prices to go bearish. Unfortunately, you can see price starting to run bullish, right? Going into mitigating some flip zones perhaps, right? We don't do this, obviously. A lot of traders do this, obviously, smart money traders, but we don't do that. Once price sweeps here, we can't automatically think that the market is bullish. We have to think that the market is still bearish because the 4 hour was swept. All this market price movement in here is the 15-minute. That means I'm seeing everything outside the box by understanding that the 4 hour is the area where price actually swept liquidity. Therefore, I can't automatically assume that the 15-minute here is a buy because there's a demand zone here, right? I have to think automatically it's a sell. So in my case, I can see that there's liquidity, and if price has not moved inside, right, back in here to take out to go bearish because it was swept, and price still continuing bullish, then I can't partake in this market today, right? You might wait for some time. I mean, this is 15, another 15 minutes. That's 30, right? Then you have about 2 hours there, about 3 hours worth of time, right, before price even started to reverse bearish here, and so. Right, this would have taken quite some time for me to wait, but I like it when price sweeps and then starts to run bearish, right? It takes maybe a couple candles up, maybe maybe an hour, maybe 30 minutes to an hour for price to go up and then to run bearish like this. But let's continue, right? So right here, once we see the liquidity swept, price is going bearish, we can already see here that there's a high, there's a low. This would have been the other liquidity area that I would have wanted to see price to sweep to continue. Why? Because we're on the 15-minute, right? General rule of thumb is we want, when the open happens, we generally want New York and or London to sweep a high or low or sweep some sort of liquidity to continue the market in its intended direction. So right now you can see New York opened here, right, and price ran. If you look to the left, price didn't really sweep anything here. It just left double tops, right? So you can connect all this, right, just like this, right? And as well as I'm well aware, about 70-80% of the time, New York sweeps liquidity and runs. So in this time it didn't do anything, right? It just left all this liquidity up there. So there's other sellers in here, right? So price ran down, came back up, mitigated the supply zone, and just ran, right? Why is it doing this? It's because it's trying to create more liquidity, right? It's creating more order flow. So if that's the case, then in this case, I wouldn't have sold anything from this high down to this low, nothing from this high, nothing from this low. Now I could see this because this is an actual high with a whole bunch of liquidity. I would be able to see that. This, I would be able to say, okay, well, I see that on the 15-minute, it has finally swept liquidity, and I can now partake in this entry, right? And where do we target? The next demand zone right here. That would be a safe area to target, right? You could look to target all these lows because essentially this is all liquidity. I don't necessarily target the main low down here between this low and this high. It's because there's never a guarantee or assurance that price will always sweep the lows. Because every low and every high is manipulated, this low here, as you can see, once it was swept here, you can see the market moved up, right? So if you were selling, let's say here or here, anywhere in here, right, you would have had price to come and take you out. That's why I sell here, I TP the nearest demand zone, and that's it. Don't try to be greedy in the markets, right? Now, in theory, you could also hold this because it could go bearish. You could say, I want to take partials there, right, and the rest of the trade to come down here, right? But this is what may happen. You see this? Now you would have had a break even, and you would have regretted that you actually wished to cash out here, right? To sell your entire position here and be done with it, right? To close your entire position here, right? And be done. So that's how you do it, right? Let's go back on the 4 hour and do a few more examples. We can also have the daily time frame as just to know and just to see where everything is. We need to be looking at everything in hindsight. Now I do see all this liquidity obviously right here because there's an imbalance. A bunch of liquidity was here, so we do see price running bullish here. I know it's kind of giving it away there a bit, but let's go on the 15-minute time frame. Now, what I'm looking for here is for prices to sweep some sort of liquidity. That means when London opens, I'm looking for prices to sweep a low, right? Simultaneously, I'll look for anything a high or a low or some sort of liquidity to be swept above as well, because we know that's what generates the market. That's what the market does, right? It sweeps liquidity and it runs the other way. Now, let's look over here. We did see this low right there. You can see. So on London, this would have been an entry. Remember, I'm already having my brain's thinking we're bullish, right? So I already just looked at everything outside the box. That means I went on the daily time frame, just like this, and I saw that we swept all this liquidity. That means my direction is bullish here. That means I'm thinking buys, right? I'm not looking for sells. Although things can also contradict on the 4 hour. Maybe we have a 4 hour high that we sweep, but we can sell as well, right? Because the daily and the 4 hour are the directional time frame. So let's go down here. We can already see when London session opened, you had a sweep of all this liquidity, and you could look to buy this. Now, generally speaking, you should target the supply zone, right? Wherever the risk would be is up to you, right? Just trying to show you how this would work. Your TP would have been already hit. This would have taken, so every candle is 15 minutes here. That would be 15, that would be 30 minutes, an hour, 3 hours, 4 hours, 5 hours, 6 hours. So yeah, about 5 to 6 hours here, this would have taken you to hit this TP, right? And that's it. That's all that you need. And we know London doesn't move that much during during the US 100, right? So let's wait for New York now. I believe this may be New York. No, that's 6:45. Yeah. So here's 6:30. 6:30 is my, let me see, is this New York? This is New York time. No, so it hasn't shown up yet. So we're waiting for 9:30 to open up, okay? That will be New York time. So let's play this little by little and wait for 9:30 to show up, and we're going to wait for prices to come and take out a low, if that would be possible, if it shows us anything. Okay, so interestingly enough, price does move even further out here, right? It's not interesting, but it's supposed to happen because we are looking for price to go bullish. It is 8:45. Let's wait for 9:30 to show up. We see 9. Okay, nothing is really convincing me here to look to buy yet. The only way I'd look to buy is if we sweep some form of liquidity, which would be right here. Okay, right there. And let's see what happens here. Okay, so price just started to shoot up. I can already see this, the next area here. This is the next one. Did this take out this high up here? No, we did not. So I'm waiting for New York to come back, sweep this so I can take it bullish. And it also may not. So let's see what happens. There we go. We do have that sweep. We're going to take price back to bullish right here. And let's see what happens. Okay, that's good. So that was good. We finished there for the day, strong for the day, right? And again, why did this work? We didn't fight the direction. I was able to see everything outside the box, right? What is the outside of the box again? Let's go in the 4 hour. Okay, and revisit the 4 hour. We noticed that we had the daily sweep to liquidity right here. Okay, this is being aware of what's around you, not just in that small one time frame, right? Like 1 minute or 5 minute or 10 minute, right? You need to be aware of what's around you, right? Because the higher time frame holds all that data and holds a lot of volume, right? For prices to give that extra push, to take all that money from the higher time frame and move it into the lower time frames, right? The lower time frames are just creating the higher time frames, but they're moving the market in that direction, right? So we had that TP, that was good. We also have this. Let's do a couple more. I think you guys are starting to understand the idea here. On the daily again, let's go on the 4 hour. Okay, so on the daily, this doesn't hold as much weight on the daily as it would the 4 hour. The reason why is because we need the daily to sweep a daily liquidity, like all this, or a inducement, right? Something like this as well for the daily, for prices to continue. Because once this has happened, you're creating yourself the opportunity now. The market has created the opportunity for you to tell you that the market is bearish the rest of the way, right? For a long time. This took what? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 14, 15, 16, 17, about 17 days, right? It took the market about 17 days bearish, right? And so you would have been trading price bearish here for 17 days. That's how you understand, and you have to understand where your surroundings are versus when you're on the 1 hour or the 30 minute or 50 minute, because you're not trading the liquidity on the lower time frames. Mainly, you're trading the direction on the higher time frame. So let's go down the 4 hour. You can see here, We have the 4-hour high, right? It hasn't been swept yet, but excuse me, guys, if you hear that, this is the motorcycles out here. I have my windows open. It's quite irritating. I know I should have them closed, but yeah, I hope you guys can hear me though. Okay, so right now we just hit a TP there, right? Now we wait for the next session, right? I know the market intention is to go bullish, but here's the thing though. When we're buying here, we have no clue. No one has a clue. No one knows if the market should break this, break the high or break the low. In fact, one of the main things that I've always encountered when I used to trade a lot was to always trade towards a higher low, to break the higher low. And a lot of times I find that inaccurate because the market can break the higher the low, but it's not always guaranteed. What is guaranteed 99% of the time is for price to go into supply, into demand, because that's where a lot of traders are. That's where a lot of people want to buy and sell, right? So the market's going to favor those types of traders, right? The market's going to go and facilitate and help those traders to come and fill in their orders, right? Not necessarily to just take everybody's liquidity out, because we don't know when liquidity is going to be swept. And that's the key thing here, is to know that we shouldn't know what we don't know. In fact, don't try to understand what you don't know, right? If that makes any sense. Like, don't go into a deeper, darker area and a deeper hole and say, well, why isn't the high breaking? I mean, the high should have been broken. Nothing is for certain in the markets. We can always be certain for things to understand where buyers like you and I, retail traders like you and I, are. And that's where the market is going. That's where the intent is going, right? The intention of the market. So the reason why this worked out, we saw the higher time frame, right? Price swept liquidity. It also swept internal liquidity in here, the 4-hour. And then the 15-minute, we waited for the 15-minute to switch, right? The 15-minute swept the liquidity, ran up, right? Right here as well, the 15-minute took out this inducement here. We waited for price to sweep, we entered, and now we targeted the next supply zone. And that's it, right? So, but I can't hold this now and say, yes, price is coming up here. It's going to sweep the high. I don't know that. Nobody knows that, right? Yes, there is a bunch of liquidity here, but what can happen also is price can stop here. Let me get rid of this magnet. Price can stop here at the supply zone, right? Facilitate and help these suppliers, right? And then can drag price down, right? And it can continue influencing price, right? So I can't guarantee and say it's going to come and take out high, even though this is external liquidity, right? But let's see, for all time's sake, let's see what will happen. Look, see what I mean? Right? Price is going against you. Now, it doesn't mean it's going fully against you, right? It could continue bullish, right? It's just filling those orders in for those supply and demand traders to come in, and then price will take another bullish move, right? Let's see what happens. Okay, price is still fluctuating here, right? You can see it's trying to fulfill all those orders again, tricking people to thinking it's a sell, but it's really a buy, right? Let's continue. All right, so that's the end of the session of New York. But look what's happening. Again, just like as I said, right? There's no guarantee for price to come and break that high. In fact, I believe, yeah, I took out all that liquidity above and came in, mitigated this supply zone. So now there are traders wanting to go bearish, right? In all time's sake, price could go bullish. We have no clue, right? We did sweep up more liquidity there, but this is not my time zone. It's not my time to trade. But this one is here because this is London. And if it swept us low, we would be ready to go. No, so it didn't sweep that low. However, I do see this 15-minute low. This is actually okay. This is good because we have a low, high, low, high. That is your inducement right here. And this would be your demand zone here. I don't fully trade supply and demand zones. I just trade liquidity. And if supply and demand zone is present, then I'll take a look at that supply and demand zone and act as if it was an order block and then just enter. So this would be fine in my book because we did sweep this inducement with all the bunch of liquidity. What do you do here again? And, oh, excuse me, that was my dog. That's my dog. Oh, excuse me, guys. Again. Okay, so once you enter here, right, you could look to target your nearest supply zone. This would be a perfect supply zone to finish your trade because we haven't broken this high. Remember, never think about breaking the high or breaking the low because we don't have a clue. No one has a clue, right? But this would be a healthy trade. Don't shoot for the stars. Shoot for what you see on this planet Earth. That's it. If that makes any sense, right? So let's continue, right? We're going to wait for New York now because we hit the TP. This is fine. It's okay. You don't need to worry about why price is going up. You can just target what you see. Okay, right here I can already see New York opened. I would have anticipated for this low, all this liquidity here to be swept because it is the 15-minute. It didn't give us that, so this might have been a sort of a avoided trade for the day, right? Although we did sweep the 4-hour, so I can also look for the 15-minute to go bearish here, and I can take trades here as well. One thing I do want to mention is we just swept all this liquidity, this external. Therefore, we want to trade away from the external, not internal, right? This got swept. I still wouldn't be interested because I'm still looking for sells. However, no actual setups have come in here. Oh, I do see that actually now that I reacted to it a little bit slowly, but there you go. All right, that would be an opportunity again, right there, right? Risk above, target the nearest demand zone. That would be your nearest demand, right there, right? Now, why do I want to sell there? It's because we swept the external liquidity on the 4-hour. Remember, we had the 4-hour. We were able to go on the 4-hour and to see what was outside the box, right? I was working from outside, going inside the box, right? Going inside the price, right? So let's see what happens. We took out all the liquidity. I would have seen my opportunity. Let's see if we can hit it. Okay, may or may not have hit it. This, in fact, there might have been a supply or demand zone in here somewhere. I don't know. This is the one I was looking for. Price did sell into a demand. I just don't know which demand it was exactly. This is where I would have wanted it. Might have broken even in here, no problem. This still is... looks like it's bullish. We did sweep more liquidity. This liquidity wasn't convincing enough for me to take it bullish because we did sweep the 4-hour liquidity, right? The external. This is internal. Price does have the ability to run up there, right? But this is also, if you look at this is the discount, this is the premium. So you got to ask yourself, why would I want to be buying here when I should be selling, right? So that's another thing. This is why I favored the sell here rather than the buy, because we just swept liquidity and we're in the premium. So I want to be selling in premium, not buying in premium, right? All right, let's do one more last one, okay? So right here, this is still considered the sweep, okay? We're going to wait on the London. Let's see, when is the timing there? 2:45. London opens at 3 here, okay? So that's New York, 3 p.m. There is not here. This isn't good. Yeah, there was nothing good there. I can just see the high, the low, and the high and the low. Liquidity would be right there. There's nothing here, so I can't sell anything. You might be a little cheeky to buy this, but again, why would you want to buy here when you're in premium? So let's wait for New York to come out. Maybe it can give us something. Okay, see, good thing I didn't buy there. You can see New York open, it ran bearish. There was no opportunities for me on New York just yet, but again, I'm still looking to sell. This would have been a sell there, but it would have been a small sell. I would have sold there, targeted. Honestly, I would have targeted this demand zone right in here. Now it's small, but it's on the 1 minute. We see the sweep of the liquidity over here. I would have sold it into this demand. Nothing over here. I can't tell you and guarantee the price is going to come all the way down here. Price can just start shooting up from here. But let's look for another entry. Might get another one right there. Yeah, because I see that. Did this sweep here? Yes, it did. Did it sweep? Yeah. Okay, so there's your other demand zone there. Okay, so there you go. All right, so there's multiple actually. So this was the first entry, right? Second entry was here. Okay, and again, where are we targeting? Demand zones, right? You can see here, when we entered here, you target this demand zone. You sell here, you target this demand zone, right? Now the market has swept this again, right? Wherever your risk would be. If this risk is too big, you don't have to enter on the 15-minute, but we have the confidence that price can take it bearish here because everything is bearish here. Let's continue here. We can see already that the demand zone was hit here. This is internal. We can look to take the external demand zone. Let's see if that would work. Okay, that's fine. So pretty much we just had 3 entries, right? All of them actually met my criteria right here. You can see we hit this demand there, we hit this demand, and this demand would have also been hit as well. So we took out liquidity, we sold, took out liquidity, we sold into this demand, right? This would be the third one right here. So, and it looks like actually the New York has finished here. So we would be done, right? We wouldn't be trading any more than we have to, right? But again, you can see everything is working out the way it should be, right? If you were to trade Australian, believe this is Australian, then Asia. So this would have been Asia right here, right? And you can also trade that into the demand zone, right there. So you would have hit TP on that right there, right? So I hope you guys understand this, everything I'm talking about, seeing everything outside the box. Look outside, right, which is above the internal structure, right, which is 1 minute. Anything below 15-minute is internal, it's small, right? I don't mess around in there until I see what the daily, 4-hour, and then the 15-minute do. Okay, guys, until then, I hope you like this video. Please leave us a thumbs up on this channel and subscribe to our channel as well. We love you, and we'll see you in the next video.